Hooty-hoo, all my stock market gamblers. Welcome today. I'm Tall Mike. I'm so glad you're here. What do we got going on in the market today? Well, it's a Monday, right? So we had the weekend off. Hopefully everybody had a great weekend. But the markets are they're having kind of a mixed day. The Dow's up about 25 points. The NASDAQ, though, getting hit pretty hard, down 120 points. The S&P is down about 10 points. So what's really going on? Well, I think a lot of the top money managers are actually getting out of stocks. They're dumping the stocks at these high levels, hoping that the market comes back in so that they can buy back in again. Now, a lot of people are still looking for a place to get into this market. Now, why? I'm not really sure. I guess that's the push into AI. A lot of people think artificial intelligence is going to send this market a lot higher. That's just not my take. My take is this market's starting to come down. It's starting to roll over. You see that with the small caps. The IWM, which is the Russell 2000, that's already rolled over. It's below its 20-day moving average. And the S&P is kind of sitting right on its 20-day moving average. Now, the S&P could get a little bit of a bounce here before it finally rolls over and drops below that 20-day moving average. I'm waiting for that S&P to really drop below the 20-day moving average so that I can jump in with a bigger short position and put my short position on. But I will not do that until we get below the 20-day moving average on the S&P. And I do expect that we might have a little bit of a bounce first before we come back down. But I do think we've seen the highs. I think we've seen the highs, which goes back over a week ago on that Friday where they popped up. There are some gaps though. Now the S&P has been gapping down. Sometimes you come back and fill those gaps before you go lower. So my take is that the market is going to continue to come in. All right, let's get over to the real estate market. Now, real estate market, well, it's kind of fascinating to me. Now I have a question. Okay, so house prices are down year over year, and they're still continuing to come down. Why? Look, inventory's low. Inventory's low, right? The Federal Reserve, they paused interest rate increases. They've taken a pause. They call it a skip. I'll call it a pause. They've taken a pause in raising rates. And what's that done to mortgage rates? Well, we were above 7%. Now we dropped down to just below 7%, around 6.7%. But if everything is like so good in the market right now, like there's no recession, unemployment's at 3%, and inventory's very constricted, why aren't prices going up? Well, let me tell you why. They're not going up because it's a just terrible time to buy right now. Look, prices are still relatively high now. I'll admit that. You can get within 10% of the price that Billy Bob got. Billy Bob got out at the top, and we come down a little bit, down about 10% in most areas, but you can still get pretty close to the price Billy Bob got out at. Now, if you're a buyer, do you want to be buying at these high prices with interest rates doubling what they were just a year ago? Year ago, about 3%. Now we're at 6.7%. So you got high prices and high interest rates. Okay, now that's a terrible time to be buying. But with inventory constrained, shouldn't prices be going up? If everything's great, well, it doesn't work like that. Everything's not really that great. Prices are still coming down. Okay, now there's a thing called leading indicators that economists, now I'm an economist and I've trained as an economist, and there's leading indicators that determine where the economy is going, what direction they're going. Now, a leading indicator would be the volume of home sales. The volume of home sales is the leading indicator. And what's volume done? Well, volume has come down by 20 to 30% in most areas. So the leading indicator tells you that the housing market is going to continue to head lower. Now, the lagging indicator will be the prices, okay? Prices will continue to drop. Okay, now what's going to make them continue to drop? Okay, well, as the money gets tighter, as there becomes a credit crunch, we talk about the banking crisis. We've had 3 of the top 30 banks, 10% of the top 30 banks have already failed. And I believe that there's going to be a lot more failures as credit and money starts to get tighter. It's going to be harder to get a mortgage. Even if rates come down, it's still going to be harder to get a mortgage. Rates may come down to 5%, but they may say, well, your 800 credit score is not good enough to get a mortgage. Money is going to tighten up. All right, so that's a problem. And now affordability of houses is way off the Richter scale. Okay, I mean, people were overpaying. And they're still overpaying, in my opinion. And you hear about houses going on the market and you get that bidding war still. But in just a year ago, you were getting bidding wars $100,000 over the listing price. So people were way overpaying for houses and they're just not affordable at these levels. But what people are finding out now is the cost of home ownership is very expensive. So if you bought a home in the last year and your rate's up there around the 7% level for your mortgage, you're finding out that you can barely afford to make the payment. As a matter of fact, it's estimated that 80% of the people that bought a home in the last year are really struggling to make their mortgage payment. Now, why? Well, a lot of these people, they didn't put enough money down. Okay, so they have what's called PMI. Okay, PMI is mortgage insurance for the lender if you don't put 20% down. You have to put 20% down so you don't have PMI. And PMI can add a couple $100 to the loan payment every month. So they got PMI on that. All right, well, they got insurance, right? But now their insurance is renewed. Let's say they've owned the property for a year. Now insurance rates have gone up. They've gone up a lot. Man, if you live in places, oh man, like Florida, I feel sorry for Florida. A lot of people paying $6,000, $8,000 a year just for their home insurance on basically $1 million home. $8,000 on $1 million home that's your insurance premium. Now, it wasn't that high when you bought it. It's almost doubled in the last year. And in California, we're starting to creep up in insurance also. But property taxes continue to go up. And they're pricing a lot of people out of their homes now. A lot of people, I mean, California gets criticized for a lot of things, but in California, our property taxes can only go up by 2% a year. Okay, you're locked in, but if you live in a place like Texas, let's say the houses were $200,000 before the pandemic, $600,000 now. Well, your property taxes have tripled, maybe quadrupled even. So a lot of people are getting priced out of their home just on property taxes. But that's a very expensive thing to pay every year, right? So repairs, maybe the air conditioner went out, maybe your roof started leaking. Repairs have gone up. Look at utilities. Have your utilities bill gone up this last year? Mine went way up here in California. I mean, during the winter months, it doesn't get that cold here. I could only imagine. Some people's utility bills are well over $1,000 now. That's just crazy. $1,000 a month just for your utility bill. So home ownership has really caught people off guard and they're struggling to make the mortgage payment, right? So that's kind of a problem. The affordability of houses is way, way down at a record low, but also that once you own the house, keeping the house is becoming harder and harder because you have all these bills, right? Now, what's going to happen when we do hit the recession, when the labor market actually does turn down and we get all those layoffs? Well, what's going to happen is people are going to be forced to sell their homes. It's called forced selling. And that's going to put a lot of inventory onto the marketplace. Now, everybody's saying we don't have inventory. And if we don't have inventory, it's a terrible time to buy. You don't want to buy when inventory is low. You want to buy when there's a glut of homes out there. And you can just pick and choose which ones you want to make offers on. And you're not making full price offers at that time. You're making offers 20, 30% below what they're listed at because you have so many homes to choose from. So right now, I agree, inventory is a little constricted, it's slow, but the inventory is coming, the forced selling's coming. There's a lot of inventory coming onto the marketplace. Can I tell you another place where inventory is coming from? Airbnb. Now, okay, here's the thing. Rent prices are dropping, right? Rent prices are dropping. Year over year, we're down 3% across the nation for rent prices. I know I'll get comments in there. Hey, tell my landlord rent prices are dropping because he just raised me up. Well, you see, you got the option, you can move, right? Because vacancies are coming onto the market. They built a million new apartment units. These are luxury apartment units. I mean, they start renting at $2,000, $3,000, $4,000. People don't have money to rent these places. These are brand new units and they can't get them rented because a million units have come onto the marketplace, right? So they're having trouble getting these rented. So what are they doing? Well, they're lowering the price because they're sitting on 7, 8, 9, 10% vacancy rates in a lot of areas in apartment units. They're giving you 2, 3 months free rent in apartment units, just trying to get you to move into the properties. So rents are actually coming down. But let's talk about the Airbnb market. Now, the Airbnb market, in most areas, there's more rentals available on Airbnb than there are sales of homes. There's more Airbnb rentals than sales of homes. Now, that's not right. Now, did you think it was a good idea to turn in all our residential neighborhoods into hotels? I didn't think that was a good idea. Kind of remind me. Remember back, how many of you remember ethanol, right? Ethanol, that was going to replace gasoline. I don't even know what ethanol is made out of. I guess it's made out of corn or something. So anyways, we're going to start sticking our food supply into the cars so we wouldn't have to pay those high gas prices. Well, what happened to the price of food? Food went like that, right? Now it's the same thing. We're going with electric vehicles. I don't think that's a good idea. Just my take. In California, well, we got 5 or 10% of the vehicles out there are electric vehicles. Well, what's happening? The power grids are going down. They don't have enough electricity. They're asking you to wake up at 2 in the morning to charge your electric vehicle because you're dropping, the power grids are going down. So I don't think electric vehicles are a good idea. Anyways, I got sidetracked, but I never thought it was a good idea to turn our residential neighborhoods into hotels. And now Airbnb, a lot of these operators are starting to lose money. Why? Because the vacancy rates are spiking upward. The take that Airbnb takes, the fees are spiking upward. And even though they got that 3% mortgage, you know, that coveted 3% mortgage that everybody likes to brag about. I got 2.8. Well, even with that 2.8% mortgage, they're losing money on their Airbnb units. I know that's shocking, but that's how it's working. There's too many people got into the Airbnb business. Everybody wanted to buy houses and turn them into hotels. Well, what's happening now? A lot of areas are outlawing Airbnb. Well, they're outlawing short-term rentals is what they're doing. You have to rent it for at least a month at a time. So this is getting rid of the Airbnb business in a lot of the areas. The Airbnbers are having trouble making money. Now, they're also, in a lot of areas, they're charging them hotel taxes. There's actually hotels have to pay taxes, right? And so these Airbnb people now have an extra fee, the hotel tax fee. So a lot of these Airbnb people are going, I want out of this business. You see, we didn't have Airbnb back in 2008. That's one other thing that's different about now than 2008. You see, now we've sucked all these houses out of the market, out the for sale market, and we turned them into hotels. But now it's kind of getting a reverse effect. They're going from being hotels back into the marketplace. This is where some inventory is going to be coming onto the market because a lot of people want to get out of the hotel business. They just want to wash their hands because they're losing money in it. They can't make money in the Airbnb business anymore. So a lot of people want to get out of it. A lot of people want to get out of the rental business. You see, a lot of people own houses, but with rents dropping, they can get 5% just on a money market. And they're not making 5% on their rentals after they pay their mortgages, their expenses, their property manager. There's a lot that goes into rentals. It's not as easy as you think. You can't just go out and become a hotel operator. It doesn't work that way, but that's just what's happening. So the Airbnbers, they're putting their houses back on the market for sale and they're getting out of the business. Now, a lot of people are talk about in the comments that, well, Tall Mike, he's just negative. He's trying to get you to sell your property so that he can get the listing. Look, most of you don't live in my area. I don't want your listing. Selling a I'm not trying to influence anyone to buy a property. I'm not trying to influence you to sell a property. I'm giving you an an opinion as to what I think, but buying or selling a property is very personal. There's a lot of reasons to do it. Maybe there's a death in the family. Maybe you got a job transfer. Maybe you just got married and want to buy a house, and your wife says you have to buy a house. Honey, we're buying a house, so you don't have a choice. There's a lot of reasons that are personal. Now a guy at my church just this weekend, anyways, he was talking to me. He wants to buy a house, and he was talking about me representing him. I like the guy, so no problem, right? But I told him he would have to first sign a disclaimer saying that the house could drop by 50%. He goes, 50%? Well, you just have to sign it. It doesn't mean it's going to happen. I look at if it does drop by 50%, I don't want him coming back and suing me saying I told him it was a great time to buy. You see these people, mainstream media, the Dave Ramsey, the Barbara Cochran's, it's always a great time to buy. Well, they're just talking up their book. They're very invested in real estate, but it's not always a good time to buy. Look at foreclosures are starting to spike up. Pre-foreclosures are really starting to go. Look, there's 1.6 million people. 1.6 million people that are over 30 days late on their mortgages. Now, I'm not saying all 1.6 million are going to come onto the market instantly. No, but I mean, a lot of them will because people can't afford to pay their mortgage. And this is the good times. This is unemployment, 3%. People have their job still. Wait till they don't have their job. Wait till the end of the year. There's going to be a lot more layoffs, a lot more bank failures. Credit's going to tighten up. People are going to lose jobs. People are going to be forced to put their market up for sale. It's just the way it works. I know. People don't like to hear this. It could never happen in your area. And I think that's great that you live in such a great area where prices only go up to the moon. Anyways, if you like this stuff, give me a thumbs up. Why not? Why not? It's Monday. I'm Tall Mike. Get out there, everybody. Have a great day. Bye-bye.